Good morning this Wednesday, the 10th of May. I'm Grady Wolf, a market analyst with Bell Direct. The all-important Australian budget was released last night in the first surplus for 15 years at a figure of $4.2 billion surplus for 2022 to 2023 and massively reduced budget deficits in the forecasted years to come, with the key winners being aged care workers through receiving a pay increase of 15%, women through cheaper childcare and funding towards boosting the number of women in apprenticeships, and all Aussies through a cost of living package worth $14.6 billion. The surplus budget has been driven by high commodity prices, a strong jobs market and a boost in net migration. The big banks have been caught up in a regional banking fear sell-off over the recent weeks in the US, and investors have responded negatively to some of the respective quarterly result updates out of our big banks in Australia. However, for the likes of Westpac, the latest results included a 22% jump in profit and the declaration of a 70 cents per share dividend. Investors have been hawkeyeing the big banks' provision for doubtful debts, which have risen, and any declines in net interest margins, which for NAB appear to have peaked, with NIM down at 1.77% and bad and doubtful debts up to $393 million, well above consensus expectations. CBA released quarterly results yesterday, and despite profits jumping 10% on the prior corresponding period to $2.6 billion, investors sold out as net interest margin came in 2% lower during the quarter and provisions rose to $5.7 billion. Over on Wall Street yesterday, stocks closed lower as investor fears of turbulence in the regional banking sector, in addition to preparing for key inflation data readings out later this week in the form of US CPI and PPI readings, weighed on the market. Investors are also keeping a close eye on the US debt ceiling progression. The Dow Jones fell 0.17%, the S&P 500 lost 0.46%, and the tech-heavy Nasdaq fell 0.63% on Tuesday. Investors in the US will be keeping a close eye on debates in the region over the coming weeks around the US debt ceiling, with US Treasury Secretary Janet Yellen saying failure to raise the debt ceiling would result in an economic catastrophe. She said to CNBC that it is something that could produce financial chaos. It would drastically reduce the amount of spending and would mean that Social Security recipients and veterans and people counting on money from the government that they're owed, contractors as well, we just wouldn't have enough money to pay the bills, Yellen said. The comments came as a political stalemate over raising the debt ceiling and debt limit is forcing the Treasury Department dangerously close to the worst-case scenario of the US defaulting on debt. Over in Europe on Tuesday, markets closed lower as investors look ahead to US inflation data out this week, in addition to lower oil prices and weak Chinese trade data weighing on the markets yesterday. Germany's DAX closed flat, the French CAC fell 0.59%, and in the UK, the FTSE 100 fell 0.18%. The local index closed 0.17% lower yesterday, weighed down by a sell-off in real estate stocks, possibly due to a number of reasons, with investors maybe taking some profits from the rally in the sector last week, or the investor confidence in the sector sliding amid rising interest rates and predictions for an increasing number of defaults on mortgages to come. On the commodities front this morning, oil is trading 0.51% higher at $73.53 a barrel. Gold is up 0.76% at $2,036.69 an ounce, and iron ore is up 7.54% at $107 a ton on speculation of additional policy support for China's economic recovery. The Australian dollar is buying 68 US cents at 91.44 Japanese yen, 53.96 British pence, and 1 New Zealand dollar and 7 cents. Ahead of the local trading session here in Australia, the SPI futures are anticipating the ASX to open the midweek session 0.29% lower on the back of the global turbulence overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has downgraded the price target on Aeris Resources from 95 cents per share to 89 cents per share following the release of the precious metals producers' March quarter results, including production of copper falling short of guidance and increased all-in sustaining costs higher than Bell Potter expected. The company also lowered its copper equivalent production and EBITDA guidance for FY23. And Trading Central has identified a bearish signal on Maya following the formation of a pattern over a period of 76 days, which is roughly the same amount of time the share price may fall from the close of 81 cents to the range of 50 to 56 cents, according to standard principles of technical analysis. And that's all we have time for this morning. Happy Wednesday and happy investing.